Hey traders, this is my morning video and some things I'm looking at here real quick. What's happening? We are getting a rejection from that higher distribution back into the 2018 VPOC. That's the highest point to do business for 2018. So, just keep that in mind. This built out in 2018, and this was the VPOC for 2019 actually, but it built out in 2018. And basically, we're chopping around here trying to see how bad the hard date is going to be this week, and the financials are going to lead price definitely. I think we're actually going to bleed a little bit lower this week, but this week, in my opinion, is more because we're at this price point. In my opinion, it's probably safer to sell out of the money premium than try to do directional trades this week. That's just my personal opinion this week. So just keep that in mind going forward here. We do have heightened implied volatilities this week. We do have all the bank earnings. And as you can see here, the two red columns here, this was last week's implied volatilities, expected moves, and this is this week's. And as you can see with the SPY, you had a $12 move. We're almost 13.50 move. 8.50 move last week, 9.50 move basically this week. A much bigger expected move for the implied volatilities for the Russell. Um, a very heightened implied volatility for the semiconductors. Semiconductors is an outlier, in my opinion. That's the one we really need to be watching the first of this week because of we don't really have a news event per se to justify this heightened implied volatility for semiconductors. So there might be something going on under the hood here for the semiconductors for that heightened implied volatility going into this week. And we just have a modest increase in the implied volatility on our financials, and the financials are going to rule the roost this week. So keep that in mind going forward. And even Apple has crushed their implied volatility is coming in on Apple, but like I said, the semis are heightened going into this week. Something to definitely watch going forward here, and something you definitely want to keep on watch. But pretty much the FANG names, they're pretty much in tandem or close to what they were last week. It's just the semiconductors seem to be really jacked up here, and then along with our indices and stuff. So something to definitely keep in mind here going forward into this week's of trading. Our Qs are coming in a little bit this morning as well. You know, maybe we're digesting the move, going to go sideways this week. I don't know. Just a modest sell off this morning, 1.36. Considering we typically do 5% moves a day these days, this is just a very modest correction so far this morning. Nothing to read too much into so far this morning. And then the Russell, like I said, the implied volatilities are jacked. Look at this. We have a much greater sell-off this morning on the Russell. So something to definitely take note of. The Russell had that short squeeze yesterday. So far, the things that were driving Russell last week seem to be coming off this week. So something definitely to keep in mind that this here could be a bull trap for the Russell going into this week. So definitely something to noteworthy to keep in mind going forward here, and show you on the 1 hour real quick. As you can see, this is how this scenario for the Russell. Like I said, potential bull trap scenario. This was supposed to be the value area high for this week for the Russell. So last week, basically 80% of the inventory fell in this range. This is a responsive sell zone that built out last week for the Russell. Basically, it's suggesting that volumes are not supportive at these higher prices going into Friday's. The Friday's action was not supported by the week's action. So definitely something to keep in mind. We're probably going to be coming back down into the Russell most of the day today. So I am on a bearish side going into today's trading, thinking we're going to have some profit taking coming off the table in these markets, in my opinion, today. Okay, things I'm really looking at here. It's all about crude. Look at the volumes this morning. Crude by far leading the futures volume this morning. And one thing I do want to point out here, this little bitty uptrend, it came into resistance. The initial It didn't even come back to the midline on the crude. Already seeing rejection of price action. Markets are not really liking. They had a real nice supposed agreement for cutting production, but they couldn't even hit what the markets perceived as the bare minimum cuts. And they sounded good on paper, but they seem to be rejecting the news so far this morning. And what I did, I added a 78.6% fib. We are rejecting that as we speak. That should have been holding this morning, and it's not wanting to. So basically, what I'm seeing happening here, a very high odds that we're going back to the lows on our crude oil, considering where the price action is so far this morning. So just something to keep in mind going forward in your trading. Once you break below that 78.6, that is not a very good scenario setting up for crude oil in today's session. So something to keep in mind. Just a few seconds ago, we were negative on the day. It looks like they're trying to support price right now. But we'll see what happens here. But I'd never ever like seeing price action below the 78.6 going into a session. So something to keep in mind going forward today. That should have been an overnight buy point, and they should have been supporting prices there. And so far, they are not. Something to definitely keep in mind. Okay, in my scans of the 24-hour ETFs, basically it is by far crude. Crude just completely ruling the roost. And the lack of volume in SPY, that says something right here, that the markets are just sitting here like in a wait and see mode. So that is also telling me 4:30 in the morning here that we might have a chop fest tight trading range today, considering that situation. And also keep in mind, most of Europe is shut down today for Easter. They take Friday and Monday off for Easter. So that's another thing. These volumes are getting skewed a little bit because of the lack of European participation in the markets. So that's another thing to keep in mind. Very likely we're going to have a tight trading range today. So something to definitely keep in mind. Look at this, over 1 million contracts in USO already this morning at 4:30 in the morning. Buyers and sellers are at war definitely over the crude at current prices. So definitely something to keep on watch going forward in today's session. Okay, it's all about financials this week. All the financials are hitting the tape to speak of this week. Major issues going on here. We have two gaps right above us on financials. Virtually zero volume hit in these price ranges. And so basically, if it were to decide to take off, it can take off in a hurry here. So something to definitely keep on watch going forward here on our financials. I personally think that the financials are not going to do very well and they're going to sell the news, but it is something to definitely keep in mind here going forward on the financials. In my last video, I thought we were going to come up here and back test the gap. So we'll see what happens going forward in today's session. So far this morning, we do not have a bid in the financials. So I do definitely want to keep this in mind going forward here on our financials. Major players this week in our financials. So I definitely want to keep in mind. Basically, our expected move is right above this gap on the upside. And then we have dual expected moves down here on the downside. So that tells me going into this week's earnings, option writers were felt comfortable selling premium down at this range. Whenever you have overlapping support down in these areas, that means that they're willing to um, uh, sell premium down there. So I'm going to cancel some of these old ones, but so that's something to keep in mind, noteworthy going forward. That the price, when you have overlapping there, they were willing to sell out of the money puts down here on that overlapping value. So definitely something noteworthy coming forward, trying to go forward. And this week they were willing to sell out of the money calls up in this area up through here going into this week. So that gives you some idea of what the expectations are this week. Okay, this pattern here looks like a cup and handle scenario. Here's your cup. The handle's a little bit deeper than what I typically like. You really only want about a 1/3 retrace for a handle. So this is a really sloppy pattern, in my opinion, for a bottoming process. In my opinion, it's it's you know, so you could possibly call it an inverted head and shoulders, but we are up here at, if you call it an inverted head and shoulders, potentially at a breakout range for JP Morgan going into this week's earnings. The JP Morgan hits Tuesday morning. So tomorrow morning, JP Morgan is going to be hitting the tape. So something to definitely keep on watch um, going into this week's options. So definitely something noteworthy going forward here. So if you go out on a daily, definitely like to do these comparisons here and give you an idea of where option providers are looking. They're basically saying right here on the so basically what they're trying to do, the market makers, they are targeting 2018's VPOC, volume point of control, for this week on the upside, potential upside for JP Morgan. And that's what the pricing action, that's what they're pricing in. A move back to this potential VPOC. That's the highest point to do business back in 2018. And they translated that back over to, that was the highest point for 2019 translated over. So basically 2018's highest point to do business. They are trying to target that in their option pricing going into this week. That's also the 50 SMA on the daily. So something to keep in mind going forward here on JP Morgan. That's why the prices are getting priced the way they are. They're trying to find value. They think 2018's values are valid so far. They could be dead wrong, but that's why they're pricing the options the way they are for those targets. Okay. Wells Fargo is a beast of a different color, in my opinion. They're not even trying to get the 50 SMA for it with the pricing. They're just trying to get this bottom gap, which we have that started back in March 6th. So far this today, going into tomorrow's earnings, Wells Fargo, they're not even trying to get that. Way up here is 2019's VPOC, and basically, the VPOC 2019 actually went down for Wells Fargo because of all the scandals that they were facing last year and other situations, mortgage issues. And they actually had their VPOC migrate lower versus most of the other banks. So definitely, it's the most bearish of the banking charts. And so they might be underpricing this and they might not. So just something to definitely keep on watch going forward here. I'm just giving you the bullish case, what they're trying to price. Option sellers were willing to sell up here and not even into the 50. They were willing to sell premium even before the 50 SMA, in my opinion, based on the pricing. So definitely something to keep on watch. I didn't actually put the market, the expected moves on this one. J&J is reporting Tuesday. I think this one here has the possibility of going to 52-week highs. That with all the coronavirus situation, so this is one of the ones that I do think is going to have a bullish result from earnings tomorrow. So definitely something to keep on watch going into tomorrow's session. And one more note here on JP Morgan. We're tracked right between two VPOCs, 2018 VPOC, 2017 VPOC, smack dab in the middle. So it's anybody's guess which direction that is going to go. Bank of America has already filled one of these gaps on a very strong day, Friday. So something to definitely keep on watch going forward here. This was the 2017 VPOC that we are moving out of. We are trying to move up out of this volume distribution going into the numbers. This to me seems like a bull trap. We'll see what happens. I mean, I could be dead wrong, but I'm kind of thinking that this is a scenario that looks really looks like a bull trap for a retest back down here, spend some time building out, and then for another move higher. So we'll see what happens in these markets, but that is one of the things that I'm seeing. Okay, United Healthcare is reporting Wednesday. To me, this is a bull trap also. You're not going to see any type of increase on the income revenue side, but they have unprecedented exposure on the expense side, in my opinion. So this is a major potential drag for the markets come Wednesday. And this here is one of my favorite shorts going into earnings. I don't typically trade earnings, but I probably will have some exposure to the short side going into Wednesday's earnings for United Healthcare. So then we have Citi reporting Wednesday as well. Basically, all of this sell-off, we have not had a single earnings, a quarterly earnings to support to justify the sell-off. So basically, shorts have been covering. We've got a short squeeze coming up here. This is the volume distribution that has built out so far. This, uh, excuse me, this month, and we're trying to push out above that. And we're not even trying to get back into the uh, void on our expected moves on our city groups. So expectations are not that good for a massive bullish squeeze to the upside, in my opinion. At least that's what the market makers are not pricing in that, in my opinion. So just keep that in mind going forward here on our city group. Then we also have Goldman Sachs reporting. We have another void up here on Goldman Sachs. We are right up next to that void as we speak, going into these earnings. So something to definitely keep in mind going forward in today's trading. Let's see here. One takeaway for Goldman Sachs, I do want to point out the initial sell-off in the 2007 crash. That first earnings report, Goldman Sachs was well positioned to the short side going into the crash of 2007. So keep that in mind. Their trading revenue may blow out on Goldman Sachs going into this earnings. They report Wednesday. So that is something I definitely want to remember from 2007, that Goldman Sachs made so much money and had a really blowout quarter, because of they were already well positioned for the sell off. So definitely something to think about going forward in today's trading. And Morgan Stanley is also reporting Wednesday, so keep that in mind. So definitely, and we still have some gaps here and stuff. Basically, yearly value is up here. That's actually where they're trying to price it to come back into value for the Morgan Stanley. So definitely, and I'm going to quickly go through some other ones. BlackRock is reporting Thursday. Let's see here. BlackRock, they are an investment management company. They've probably had a lot of redemptions, so this is not one that I'm necessarily on the bullish side with. Abbott Labs, that's one of my favorites for this coronavirus play. It might still be a little bit early for that trade. I think Abbott Labs is actually going to be putting in new 52-week highs because every company out there, once they get Abbott is one of the leaders in trying to get a test for the coronavirus. And they are going, all these companies everywhere are going to want to be testing their employees for the virus. So I think they are one of the primary beneficiaries for sustained even well after this coronavirus situation is over, because the employers are not going to want to have anybody with uh, potential corona sickness on their payroll. They're going to send them home, and all these employers are going to want tests for that situation. And one big problem about the coronavirus really bothers me here in the Midwest, because we've already seen signs that there's crossover into um, a lion in one of the zoos and crossover into some animals, pets. One of my biggest concern of this is the next leg of this is maybe farm animals getting infected from the coronavirus, and that would be devastating. If people start thinking that the food they're eating is infected potentially like the poultry, birds or cattle or pigs could possibly catch that coronavirus, and that could be another thing that media is not even talking about down the road. How many meats and stuff that could all be infected with this virus. So, something to definitely keep on watch going forward here. I don't want to put up a major red flag, but something that's been bothering me. So, Taiwan Semiconductor is coming out this week. So that is probably why the semiconductors are catching an expanded move this week, knowing that Taiwan Semiconductor is actually going to probably have a very bad quarter. They've been shut down a lot long, almost all that quarter. Taiwan Semiconductor was shut down. So definitely keep in mind Taiwan Semiconductor is probably going to have a horrible, horrible quarter coming in, and the value is way down here at 44.10. So that gives you some idea of how market makers are pricing, might be positioning himself going into this news event. Philip Morris is also reporting this week. Everybody stuck at home smoking. They might have an actual pretty good quarter. This is typically a defensive play. Definitely something to think about if they're not working. All these smokers are chain smoking, sitting at home. Unfortunately, smoking does tend to pick up whenever there's periods, major downside periods in the market. So, Schlumberger, which is an oil company, likely to have horrible, horrible, horrible earnings. So definitely something to keep on watch. KSU, Railroad, they haul a lot of oil. So forward guidance and stuff for KSU is not looking very good, in my opinion. State Street's going to be reporting, another bank. Um, Definitely something to keep in mind going forward here. And well, it's not one to come up here. Let's see here. Regions Financial, that's a regional bank. That's the one that is reporting this week. So this is one of our regional banks really going to be hit by zero interest rate policy. So definitely something to keep on watch going forward this week. One of the regional banks that the regional banks are going to be hit much harder than other things. And then Friday or next Monday we have Halliburton, another oil company, likely to get hit hard on these all this data hitting the tape. So basically, that's all I got to say. Like the video if you like it, and please leave comments and stuff down below. I tried to give you a quick synopsis. It was getting a little bit long, so thanks a lot.